talk about some earnings, and among the earnings, the ones which outperformed, Indigo Paints, that's the stock which actually reported, the company reported a superb set of third quarter numbers. The revenue growth has been highest among the peers, and as a result of which, in an otherwise wobbly market, the stock is up around 4.5%, did well post the numbers that came by on Friday as well. We have Hemant Jalan, who's the CMD of the company, joining in to discuss these numbers in detail. Thanks a lot, Mr. Jalan, and congratulations once again on, beating the industry by a wide margin. Almost 3 to 4 times industry growth is what you've seen. And that really is, the first question. What is it that led to this sort of 3 to 4 times growth versus the industry for the third quarter in a row? I mean, what growth areas are you tapping within the company and outside in the industry? How much is it sustainable?
Thanks, Maloo, for having me. And as you rightly said, this is the third quarter in a row that we have outperformed the industry by a wide margin. Maybe in this quarter, the outperformance is more in the range of 4x to 5x. So this is continuation of whatever we had been talking about the previous year of turning our attention to the larger cities, engaging more deeply with the influencers. And that has led to a substantial rise in our tinting machine population. And all of these put together is what is really contributing to this industry-beating performance. And we just expect the gap to get wider as we go forward.
All right. Hi, Mr. Jalan. Good morning and good to see you in. Nigel on this side. You're sounding very optimistic and confident about the growth that you've delivered. That would mean you're gaining market share. So give us a few details.
Certainly.
What was your market share?
If you grow much faster than the industry, obviously that means some increment in the market share.
Yes. So what is the current market share and what is your target? Where does it go to?
I think we're somewhere in the region of 2.5% to 3% now. And, to grow it incrementally in the next year to go somewhere in the range of 3 to 4% would be a very ambitious and a good target to get.
All right, 2 to 3% is what you are at, looking at around 4 to 5% in the next year with the kind of growth that you are. Are you going to do that by expanding your margins as well? Because now as we speak, the industry is going into this benign raw material inflation sort of period. And typically when this happens, competitive intensity increases as well. So just a two-part question. One, on your margins, what are you likely to do going forward? And secondly, because it's competitive intensity, what will ad spends as a proportion of sales be? You've launched a new campaign with MS Dhoni as well.
So ad spends, we have been saying for some time, we are already at a fairly high decibel level. I mean, last year we were at more than 7% of our top line going into A&P spends. We don't feel at this stage a drastic increase in ad spends is what is going to help the company. So we are more or less keeping the ad spends constant over the last 2 years with a minor increase to take care of inflation. But as a percentage of top line, the ad spends drops by approximately 150 basis points from 1 year to the next. And that straight away adds to our EBITDA. And our EBITDA margin has been climbing up by almost 150 basis points year on year. And we expect the same to happen this year. Last year, we closed at an EBITDA very, very close to 17%. And we are fairly confident that we'll close this year at about 18.5%. So I don't see the margins coming under stress at all. In fact, the margins, the EBITDA growth, and even the PAT growth will continue to outperform the industry. In terms of gross margins, we have, for I think 15 quarters in a row, been the highest gross margin contributor in the industry. And I see no reason why that should change in the foreseeable future.
Okay, all right. Mr. Jalan, you're also looking at upping the capacity, right? Could you tell us what is the incremental revenues you'll be getting from the new plants in Tamil Nadu, as well as you have some capex planned, in other plants, I think so. So give us a broad number about what is the capex spend as of now, and what is the incremental revenues you'll get from the new plants?
So the capex that was spent on this new Tamil Nadu plant, which went on stream about 4 or 5 months ago, was in the region of about 280 crores. A somewhat similar number is on the anvil at Jodhpur, which is a combination of capacity increase and modernization of the plant to bring it to an automated level, which is required at these 3 throughputs. Now, each one of these CapExes are capable of delivering to the tune of about 2,000 crores in terms of revenue. Now, that does not mean that it will add 2,000 crores of revenue because capacity does not equal sales in this industry. So you plan for capacity increase a year or two before you see it happening. And you make sure that your peak demands, which happen in the months of October and March, are adequately catered to. And you generally run the plant at slightly lower capacity for the remaining months. That is the industry trend. So increase in capex is more for the long term. We needed this plant at Tamil Nadu that we set up 4 or 5 months ago when it went on stream. As I said, the Jodhpur expansion is a little bit of an expansion and a little bit of modernization.
All right. And final question then, 1,000 crore top line, when do you get by? And what's the road to 1,500 to 2,000 crores?
Well, I think this year we should be at a top line of somewhere close to 1,400 or 1,350 to 1,400 range as far as this year is concerned. And we would attempt to breach the 2,000 crore mark next year. Whether we are successful to do that or we fall a little shy of that would depend somewhat on market conditions. But if we continue to outperform the industry, then we do seek to add about 500 crores to our top line year on year.
Jalan, good luck for that. Thank you so much for joining in. The next year will be a lot of new entrants coming into the market as well. So in that regard, you going to 2,000 crores would speak about your resilience. Thanks a lot for joining in. Wish you good luck for the remainder of FY24 and FY25 itself.